What's going on, traders, and welcome back to my YouTube channel. It's your boy here, the Forex Amateur, and for the first time ever, welcome to the Amateur Effect free price action course, right? So as I've been speaking about for quite a while, that I will be doing a free price action course. So this is the first video that I will be putting up that will form part of the course, right? Um, how often I will be uploading the videos, perhaps a good couple a week, perhaps 3 to 4 a week, but we will see exactly how that does play out. Let's get straight into this. Now, it's going to be a very, very interesting start to any sort of course that you would have been in before, right? Because as I did say, the main focus of this course is to give you a deeper understanding of price action, number one. And number two is to be able to give you the knowledge and the ability to be able to read the markets and navigate the markets and understand what price action is saying, right? So, with that being said, remember, I'm not going to be giving you a strategy in this videos, right? I'm not going to give you a strategy in this course, right? Um, you're still going to have to do some work. Yes, all these concepts that I do speak about on these videos are going to work very well together, but it's not going to be a full strategy. So looking at this right now, when I say it's going to be a very interesting start to a course, we're going to start with a very interesting topic that most people don't discuss, right? And that is backtesting. Now, I'm pretty sure you must have seen on the title of the video already what it is about, right? But that is backtesting. Now, for me, I find that backtesting is a very interesting conversation because in most cases you find people backtesting or forward testing or whichever you choose to do, and you find people not understanding exactly what it is that their goal is, right? Or you find people not understanding what the process is behind a backtesting. Now, for me, I found that obviously you need to backtest uh, in order for you to find information about your strategy, whether it's successful, whether it's profitable, whether it's consistent, what's your loss rate, things like that. Very interesting things that you can identify from backtesting, right? But your backtesting does need to be effective in order for you to be able to gain this sort of information and in order for this information to be plausible, right? So we're going to start talking about backtesting, right? Now, for me, I say that backtesting is separated in two specific types of backtesting, right? Now, what do I mean by two specific types of backtesting? Let me just actually grab up a whiteboard as well here. Right? So I say there's two specific types of backtesting. And when I say two types of backtesting, I say that there's two specific reasons that people backtest, right? Whether it's knowingly or unknowingly, people backtest in for two specific reasons, right? So reason number one would be to test the profitability, right? So the profitability of their strategy, that would be the first reason that somebody would be backtesting. Now, when you backtesting to test profitability, you're backtesting to see exactly what sort of dollar value or rand value or euro value or pound value, whatever your currency or whatever currency you do trade in, right? You're looking to see what is the profitability of your strategy, how much in dollars does it generate you, right? How much in dollars does it generate you? Or if it is profitable or not, this is also something that you would be looking to gain from a type of backtesting where it's targeted at profitability, right? The second type of backtesting, or the second reason that people do backtest, is for gaining confidence. right? Now, with this, it is also a very important factor. Now, when it comes to trading and trading full time or trading professionally or whatever you want to call it, it is very important for you to be confident in the work that you do. It's very important for you to be confident in your analysis, confident in your forecasting, confident in your levels, confident in all of those things so that you are able to be profitable, right? Because essentially, if you do not have confidence, you'll find yourself doing things like, um, being afraid of missing out on a move and jumping into early, things like jumping into early and then going into huge drawdowns, things like jumping into early and then stop losses getting hit, things like jumping out of a trade too early or jumping out of a trade before it's hit your TP and all of those things, right? So these are all things that stem from a lack of confidence, FOMO, and all of those things, right? So this is the second reason that I would say people backtest. Now, when you backtest to gain confidence, what you are basically doing is you understand what your strategy is. In most cases, you already understand the profitability of your strategy. You know that it is profitable because there's no point in you trying to gain confidence in applying something that does not work, right? So you've obviously tested profitability and you know that it is a profitable strategy, right? What you now do is you're back testing to gain confidence, implementing it over and over and over again, and actually being in a trade and experiencing the swings up and the swings down is a huge part of experiencing that psychology and that psychological journey that you go on when you're trading live capital, right? Remember, I do not in any way advocate trading live capital. All of the concepts that you will learn on these this specific course is I recommendable for you to take it back and test it on your demo accounts, right? Now, one of the reasons why I've also started with a video on backtesting is because I want you to go back and backtest each of the specific concepts that we do speak about throughout this course, right? So it's an opportunity. Now you know you're able to segment and compartmentalize and understand what's happening in terms of what you're doing with your backtesting. So you know exactly how to test the concepts and stuff like that. So I wanted to make sure that I get that in there so that we don't go through the entire course and you still aren't able to grasp the amount of information that you could grasp if you simply understood how to target your backtesting. Right now, when I look at backtesting as a whole, regardless of what type of backtesting you're going to do, I've basically broken it down into three specific groups of activities or things that you need to specifically have or do in order for your backtesting to be effective. Right now, the purpose of this video is to speak to you about effective backtesting. Right now, in order for your backtesting to be effective, I've broken it down into three groups of things that you need to do, or three steps. Let's call it three steps, right? Broken it down to three steps. Now, each of these steps obviously has uh, a whole lot of points below it, but like, yeah, it is what it is, right? So, looking at that, the first step that I would say, or the first group, or the first phase that I would speak about is when you are beginning. Now, you have not started your back testing, you have not decided what you're doing. You need to sit down and you need to plan what it is that you're trying to accomplish, or else you're not doing it the right way, right? So, the very first thing that you need to do, right, in the first group, so let's call it three steps or three phases, right? Let's call it three phases. I like three phases. So, the first phase, right, phase one is, let me actually make it bullet points, right? So phase one is clear rules to taking trades and testing, right? Now, what you need to have is you need to have clear rules. So before you begin your back testing, your strategy needs to have clear rules. What is it that you are back testing? Let's say, for instance, you've just picked up the RSI divergence strategy, right? And you're now looking to use it and apply it in your trading. What you will now need to do is you need to have clear, definitive rules that as to how you're going to apply the RSI divergence, right? Perhaps you want to apply it on the higher time frame because you find that it is much more likely for it to play out in a profitable manner on the higher time frame, or perhaps you would like to use it on the lower time frame as you're more of an intraday scalper or something to that effect, right? So you need to have clear rules around your strategy, around what it is that you are testing. Are you testing maybe the double tops with a break and retest of the neckline? Or are you testing a head and shoulders where price is still on the right shoulder, and how often does a rejection candle work in that instance? So things like that, you need to have clear rules. Okay, I will, if I see this forming in this specific area, then what I will do is I will react in this manner, right? So if I see a double top and it's broken and retested the neckline, I will look for a rejection candle, and I will enter with 1% risk, or with 2% risk, or with 3% risk. Target will be a 1 to 3, or 1 to 5, or whatever it is, so that you are able to effectively put this into practice. Because one of the biggest downfalls with traders is the emotional aspect when it comes to trading, when it comes to your decision making in trading, right? Now, what do I mean by the emotional aspect? When you're taking those trades, right, you're picking and choosing which trades you're going to take, even if they do meet your criteria, right? So you find a trade, you find a setup, it's done everything that you need to see it do. You're testing double tops, or you're trading double tops, and it breaks and retests the neckline. It gives you a nice rejection candlestick, and you're like, no, I don't like this type of a candlestick. Let me wait to see another candlestick, or let me wait to see a different, and then you find price trading away from you. Now, in instances like that, that's a lack of discipline, because once you know that this is how you put a machine together and it works, you're not now going to go and rearrange that machine and try to make it work in a different way, unless you're obviously adding things that you've tested that work separately and that are going to advance the workability, or the effectiveness of the piece of machinery that you're currently trying to enhance, right? So have your clear rules, and once you have those clear rules, every single setup, that is number two, right? So the second part over here is every setup, right? So what we're going to say is take every setup. It is very important in order for your back testing uh, to be effective. In order for your back testing to be effective, your targeted back testing to be effective, it is important that you take every setup. When you take every setup, you learn much more. The goal should be whatever your sample size is. Maybe you want to take 100 trades with the specific concept that you're testing. Maybe you want to take 200 trades, whatever it is. Maybe you want to test 1 month of data. Maybe it's a setup that's a seasonal setup and it only works twice a year, or whatever it is. Have those specific rules, number one. And number two, take every setup, right? Take every setup that fits those rules, right? Because you've got your rules, you know that this is what you're testing. There's no need for you to be emotional about it. And the same thing when it comes to live trading. If you are live trading funds at your own risk, ensure that you have that discipline. Once your setup qualifies and it meets your rules and your criteria that you have tested, and you do know that it is profitable or consistently profitable, right? Then what you essentially do in that instance is take every single setup that you see. If you're on the charts, or if you're not on the charts, if it's not within your trading time, obviously that will be part of your rules as well. It's not within your trading time, or whatever it is, then I would understand. But if it part of your rules means it qualifies during your trading time, it ticks all of those boxes, right? So that's very important. Now let's move on from that. Very lastly, in the first phase of your back testing, it's important for you to have a period block, right? A period block. Now you need to know what your sample size is. Now this might not be a period block. This could be a specific number of trades that you want to take with this specific concept, right? And backtesting sample size. So it depends on what type of sample size you want to work with, whether it is that you want to work with 3 months of data, or whether it is you want to work with a specific amount of trades, right? Once you've defined that, it's important that you take every setup, because once you've got that defined sample size, you're going to determine the success of your strategy, or the effectiveness, or the profitability, or whatever it is of your strategy, based on that sample size of data. So that's going to count for a lot of your decisions moving forward. It's important that you are thorough in testing, so that once you put the car on the road, it doesn't blow up, right? If you understand what I'm trying to say there. So moving on from that, let's move on to the second phase, right? So phase two, second phase of that. Once you've got your period block in place, right? Once you've got your period block in place, you've now done your testing, you've now taken every setup, you've now completed and taken your trades, right? Because phase one is where you're defining your rules. Obviously, thereafter, you will be taking your trades, right? Once you've done that, once you've done that, what you now need to go back and do is you need to go back and you need to see a review. So phase two is a review of what you have done now with the trades that you have taken based on what you've done in phase one, right? So it will be a review of sample data, right? Sample data. That is what you would be looking at. You'd be looking to review whatever data it is that you have, whether it is the number of trades that you've been taking, whether it is the amount of months of trades that you've taken, and you will now start to review the sample size. When I say review the sample size, what am I referring to? You're looking for what are the setups that you've missed setups where it could have formed your entry requirement, but it didn't quite meet it to the T, right? And you missed a really good setup in those instances. It's important for you to make a note of those things, right? You make a note of those things because you're now reviewing the data. You're trying to understand what's happening with this specific concept or with this specific strategy or approach or upper hand or whatever it is that you're now testing on the market, right? You're looking for what else? You're also looking for setups that did not fit your criteria, right? Now, when I say that did not meet criteria, it did not meet at all. It did not meet criteria, but it got to a point where you knew that this was going to happen, but it did not meet your criteria. Now, for those things, there are things that you could learn from those. You could be going through that data and look at what happens in those specific instances. And perhaps there might be a modification that you could make to account for that. Maybe there's a specific candlestick that forms in that area that generally signifies that price is going to turn and it doesn't quite come back into where you're looking for, or it doesn't quite form the type of pattern you're looking for, or whatever it is, right? So looking at something like that, it's important to go back and look at setups that did not fit your rules, right? Now, in terms of this, it's important for you to go back and when you are reviewing your sample data, you go back and you look through it. You keep on going back and you're looking through your sample data to understand what is it that you can grasp from this. Perhaps maybe you're losing on a specific pair at a specific time of day. Perhaps it is that you're losing on a specific setup that you're taking on a specific time frame. Perhaps it is that you're losing because you're looking at a specific candlestick in the wrong way, right? When you start to put together this information and even journal these trades as well that you're taking, maybe with screenshots of the setups and stuff like that, because this is now your back testing is now going to determine whether or not you're going to use this concept and whether or not you're going to put your hard-earned money on the line behind this concept and try to speculate and invest with that if you are choosing to do so. Now we're going to move over to the third phase, right? Now, for the third phase, it's for you to now go back and review everything, because what we could also put here in the second phase is we could put something like repeat, right? Repeat 1 and 2, or repeat 2 and 3, or some shit like that. Sorry about that. Repeat phase 1 and 2, 3, maybe 3 times, right? So we could put something like that. Now, before you get to phase 3, you now repeat phase one and two maybe three times. So if your sample size is going to be 100 trades, then you take 100 trades, you repeat all of these steps three times. So now you've got an even bigger sample size, and you've now thoroughly gone through all of the requirements of your setup. You've thoroughly gone through every single instance where it's occurred, and you've gone back and you've also reviewed that data, right? Now, phase three, you now reflect back on the data to see, okay, what is the information that you've now grasped from there? Once you've reviewed, there's things that you are going to notice, right? You now need to go back and you need to reflect on those things. What is it that you are taking away from that? Like I said, maybe there's a specific setup that you're losing at a specific time. Maybe there's a specific instrument that you're just not really profitable, or you just can't really trade, or you're trying to force your concepts to work on them and they just don't, that type of thing, right? Now, in this, what you're specifically looking for in the third phase is you're looking at analytics, right? You're looking at numbers. At this stage here, you've now done all of the previous steps multiple times. You've now got a lot of information. You've got a lot of numbers. If you were doing it maybe on an Excel spreadsheet or something like that, you've got a nice big amount of data that you can work with. You now look at analytics, right? You're looking at numbers. You're looking at things like basic stats, right? You're looking at basic stats. You're looking at basic stats such as uh, your win rate, right? Your win rate that you're looking at. Maybe you're looking at uh, how often do you win on that setup? How often? How was your win rate on a specific day? How was your win rate on a specific pair with a specific setup? And this is why it's so good to have more data. The more data you have, the more information you are able to grasp. Now, it can be a tedious process. It can be a very tedious process, but it's very important for you to understand that it is important to do, because of the advantage of that you simply grasp, that you simply get simply from doing this exercise, right? And once you start doing it, and once you start seeing the benefit in it, you will find that you actually backtest more often, right? Up until now, I still do. I don't really call it back testing. I call it case studies, where I mark up charts. I go back and I look at, why did this happen here? How did it happen there? When did it happen? What hours did it occur? It's not really back testing, but it's still going back and looking at analytics, right? You're looking at things like your percentage return, right? So you're looking at, what is your average percentage return? I don't know why that happened. You're looking at, what is your average percentage return? Are you winning uh, more than you're losing? Um, are you making more than you're losing? Because it's also possible for you to be winning a lot of trades, but the trades that you're winning are like maybe 1-to-1 or 1-to-5, and then you're losing a small amount of trades, but you're losing them at a 2% risk, or you're losing them at a 3% risk. And you find that even though you're losing fewer trades, because your risk is higher on those trades, you're losing more cash, right? So these are the things that you're looking at. You're looking at things like your profitability, right? Now, this would be part of the exercise as well. So these are a few of the things that you could be looking for when you are doing your back testing, and the type of information and data that you would be looking to gain from that. Right now, I'm just going to move that a bit higher so you can still see that. And let's move on from that, and let's talk at a few other points as well. Now, some of the things that you're going to be looking for is common reasons. Now, common reasons can be broken down into two parts. So I'm just going to write common reasons once, and I'm going to break it down into two parts, right? Now, common reasons you're looking at is common reasons for losses, right? For losses. And you're looking at common reasons for wins. Now, the reason I put them as two is because they are meant to be treated equally but completely different, right? From an emotional standpoint, you should have as little emotion when you win as you do when you lose, right? And that is the way to do it. If you're going to be celebrating your wins to the extent that you go crazy and you want to tell everyone about it, right? then what's going to essentially happen is your losses are going to hit you as hard, if not harder. So it's important for you to understand that you have that emotional detachment to it, right? And they are two completely different things. How you look at the common reasons for your losses, that information is information that you're going to use to learn. Common reasons for your wins, that is information that you're going to use to study. You're just going to study that information. You're going to review it every now and then, go through that information so that you can remind yourself what your winning setups look like, how you take your winning setups and stuff like that, right? So in this phase, you're looking at this specific information and you're trying to get as much detail and numbers in place for you to have a more targeted understanding of your backtesting, right? Now, if you're doing this for profitability, you could repeat this process once, twice, three times if you would like. If you're doing this to gain confidence, you're most likely going to want to repeat this much more often, right? So you could do that. Repeat it much more often. Maybe do it once a week, maybe do it twice a week, maybe once a day you do 1 hour of back testing or something like that. And that's something that you would define in phase one. And that's the great thing about having a structured approach to it. So now you know how to flow and it becomes part of your workflow and part of your day as well. Now, I hope this video has been educational and I hope you have been able to get as much knowledge as possible from here. Ensure that you have been taking notes, ensure that you're not just sitting and watching the videos, because like I said, there's going to be a lot of information that we're going to be dropping on these videos, right? So ensure you have your writing material, go back and watch this video, take notes, make points, put them up where you trade, put them up on your phone, put them up wherever you'd like, where you're going to see them and it's going to remind you how to do it, right? So until next time, pleasure as always to share with you guys, and I am wishing you guys many blessings.